Headline: Buffett's secret $3.4 billion bet unveiled. And AI's guess wasn't quite right. For months, investors, analysts, and market enthusiasts have been trying to solve a riddle hidden inside the quarterly reports of Warren Buffett's Berkshire Hathaway. The riddle: the identity of the mystery stock, a company, or perhaps several, whose name was intentionally withheld from the public in Berkshire's official filings with the U.S. Securities and Exchange Commission, SEC. In the first quarter of 2025, Buffett's team made an unusual move. Instead of disclosing all holdings as required by law, Berkshire requested confidential treatment, a legal allowance under SEC rules that lets large investors temporarily conceal certain positions. The idea is to prevent the market from reacting too soon and driving up the price, before Berkshire can quietly buy more shares at reasonable valuations. It's not the first time Buffett has done this. In past years, similar secrecy surrounded Berkshire's acquisitions of Chevron, Chubb, and Verizon. In each case, the mystery was eventually solved when the confidential period expired, but not before the investment community engaged in months of speculation. This time the guessing game had a high-tech twist. CNBC decided to enlist artificial intelligence to help identify the stock. Using a combination of Berkshire's public data, sector spending patterns, historical buying habits, and clues from the cost basis increases in different parts of the portfolio, AI models set to work. The results were intriguing. Based on a surge of around $2 billion in Berkshire's commercial and industrial category, the algorithms proposed a shortlist: Caterpillar, Honeywell, Boeing, GE Aerospace, and UPS. These companies shared traits that have historically appealed to Buffett: market dominance in their fields, durable competitive advantages, the moat Buffett often refers to, strong cash flows and pricing power, relatively stable demand, even in fluctuating economic cycles. On paper, these guesses fit the Buffett mold. But there was a catch. AI, no matter how sophisticated, was still bound by the limits of public information. Without the actual SEC disclosures, its conclusions were, at best, educated guesses. Fast forward to August 14, 2025. Berkshire Hathaway released its Q2 13F filing, the quarterly portfolio disclosure that money managers with over $100 million in assets must submit. This time the mystery was over. Not only was the confidential position revealed, but it turned out there wasn't just one mystery stock. There were four. Berkshire had been quietly building stakes in UnitedHealth Group, 5 million shares, valued at roughly $1.6 billion. Lennar, 7 million shares, worth about $799 million. Nucor, 6.6 million shares, worth approximately $856 million. Horton, a smaller position worth $191 million. All of these purchases had been initiated earlier in the year but masked under SEC confidentiality to avoid tipping off other investors while Berkshire was still buying. At first glance, the four companies seem unrelated, but a closer look reveals the Buffett logic. UnitedHealth Group, the U.S.'s largest health insurer, benefiting from demographic trends like an aging population, rising healthcare spending, and an entrenched position in the healthcare ecosystem. It's a cash-generating machine with a decades-long track record of profitability. Lennar and Horton, two of America's largest home builders. Housing remains in chronic short supply in the U.S., and interest rate fluctuations haven't erased long-term demand. Berkshire's bet here suggests confidence in the resilience of the U.S. housing market, especially in regions experiencing population growth. Nucor, the largest steel producer in the U.S., positioned to benefit from domestic manufacturing and infrastructure spending. Its focus on efficiency, recycling, and innovation gives it a cost advantage over peers. Together, these investments give Berkshire exposure to healthcare, housing, and industrial metals, three sectors that tend to have enduring demand regardless of economic cycles. While the mystery stocks grabbed the headlines, Berkshire's Q2 2025 filing showed plenty of other action. Added to holdings in Chevron, Pool Corporation, and Constellation Brands. Trimmed Apple, selling about 20 million shares but keeping over 280 million shares worth roughly $65 billion, ensuring Apple remains Berkshire's single largest holding. Reduced Bank of America, selling 26 million shares. Exited T-Mobile US entirely. Have Charter Communications. Increased stake in Lennar Advertising by over 1 million shares. Buffett's use of confidential filings isn't just about secrecy for secrecy's sake. It's a strategic tool. When Berkshire starts buying a stock, other investors often pile in, driving the price up. By concealing the identity of a target until the buying is complete, Berkshire minimizes this effect and accumulates a position at better prices. It's a move that frustrates curious analysts but protects shareholders' long-term interests. Once the position is revealed, Berkshire already owns enough shares to benefit from any price rally that follows. The AI experiment in this mystery highlighted both the potential and the limitations of machine learning in financial analysis. AI could quickly comb through historical data, analyze sector moves, and match patterns to Buffett's past behavior. But it couldn't account for the human judgment, gut feeling, and strategic patience that drive many of Buffett's decisions. Ironically, while AI suggested industrial giants like Caterpillar and Boeing, Buffett's actual picks included a healthcare titan and 2 home builders. Sectors that, while still tied to the real economy, don't fit the narrower industrial guess. This underscores a truth in investing. Numbers matter, but so does narrative, intuition, and an understanding of market psychology. The mystery stock saga offers several takeaways for everyday investors. Patience is a weapon. Buffett didn't rush to announce these holdings. He let the market come to him. Diversification is subtle. Healthcare, housing, and steel might seem disconnected, but together they create a balanced exposure to multiple economic drivers. Data isn't everything. AI made smart guesses, but human decision-making still adds layers that algorithms can't fully replicate. Ignore the noise. The speculation was entertaining, but Buffett's focus stayed on fundamentals, not market chatter.
As a company and maybe where it's at right now, it's really around how do we do things more effective, more efficiently, more safely if it involves dangerous processes. So we're early innings